first we have a momentum move up, which creates a void. So our thinking is, as long as there's no powerful reversal signal back down, we're going to continue to think long. So some of the concepts that we want to be thinking about as we look at this chart, and it's a good idea to print charts out at the end of the day and go back and look at different concepts. Can you guys identify a new high and potent reversal? Well, it's right here where the star is. Sideways movement building a supply area. This movement here, sideways, which was ultimately then followed by a breakdown. This is a sideways movement building an area of supply. Now, how do we know it's an area of supply? Well, we only know that after the fact, after the breakdown. That's what confirms this as an area of supply. We also closed under a level 3 pivot low. So it's breaking major support. Now, attempts to reverse fail. Do we see any attempts to reverse failing? Yeah, well, there are several. Some green bars here, not following through. Green bar here, no follow through. Green bar, no follow through. So there were several attempts to reverse and move higher that are failing. Here's the M top. It's confirmed when we break down here. 100% retracement with a wide range bar down followed by an inside bar. We got that one right here. Now, while this tells us that a retracement is likely to break above the inside bar, we're not looking to buy here. We're looking to short the retracement. So here we have retracement, a PSS into resistance. So we're looking to short this. And we'd be looking to short this PSS. And where would our targeted area be? Does this have void to move lower? Where is the void down to? Well, this baby's got plenty of room to drop. The area, well, we'll call it, the area down here. 10705, in that area. Absolutely. Got plenty of room to drop because of this momentum move which created a void. Again, this is the same chart. We just move it forward a couple of bars. So here, the momentum move. Here we had the retracement. We knew that there was going to be sellers here. Momentum slows at resistance. So we took this short on the break under these bars here. Right? We're in this. Comes down to the prior low. We know that there's going to be buyers there. But we have to assess what the reaction is. This really had little to no reaction. So we continue to monitor bar by bar. We already said demand is still far away. There's nothing to stop this from dropping. So we can't short now. There's no pattern to short now. But we're just managing our trade from this earlier PSS. Right? So continuing along, here there was a bit of an attempt to stabilize, but there was no support to the left. Odds were this changing of the guard would fail. An immediate potent 180 reversal engulfing the prior bullish bar confirms strong selling. Then we come down and we get into this support area where we start to expect buyers will step up. So we're looking for momentum to slow. So if we were still short any of our position, this is where we'd be looking to get out. Wide range bar up confirms buyers in this area, and that we're more likely to now retrace. Bars closing at their high tell us demand is still growing, and then we continue to see a retracement back up into this resistance area. So this is the constant analysis that we do as we wait for trades to develop and once in a trade. Right? We don't change anything from 1 minute to the next. We still ask ourselves the same questions. We still look to see where is the move likely to move into before stalling. So here's another example. Retest followed by a pivot break. That's happening up here. Tries to move up to retest, then we break this pivot right here. Alright. Did this though break major support? This move lower. Did this break major support? No. Because again, remember, this major supports the pivot low prior to a higher high. So this move up did not make a higher high. Major support still down here. So this did not break major support. It came down and tested this area here before moving back up and retracing into this resistance area. Right? So this move up created a void. Right? This move up creates a void. As we start to retrace into it, right, the expectation is that the void is going to be filled. Remember, prices are going to move in the path of least resistance. So this retracement up and double top, this is a very good shorting opportunity because there's no support here. There's nothing to stop this. So even though the trend is up, remember what I said. Lower high, lower low, lower high. This is beginning to establish a downtrend. This topping tail also broke out right here at number 4. This broke out, took out the prior pivot high and came right back in. Was at one point a very large green bar pushing up. Traders at that one point in time were thinking very bullish. But by the time this finished, not so much. Not so bullish anymore. And so we want to be shorting this. At 6, we have a greater than 100% retracement and bottoming tail. Very strong signal that we're likely done going lower, and in fact we're more likely to retrace. Well, I wouldn't say that a new uptrend is going to develop, but maybe a counter-trend retracement we could be playing. We could be looking to play for a scalp long because this did become climactic. But it would not, I would not be willing to say that a new trend is going to develop. Right, we'd have to wait for a new downtrend. Yeah, we'd have to let this retrace and wait for a new downtrend to develop. Is number 2 on the other side of the void? Yeah, you know, this one, I don't really like this one, to be honest. I look at this and say, you know what, this has void to keep dropping, but the point, or what this is showing is that if enough traders are looking at something, it can have an effect. But what we need to take from this also is that, okay, maybe some traders are going to act on this as minor support. But do we really want to be taking this long? Right? Given the way it got down to this area, do we as pristine trained traders want to be taking this setup long? Yes or no? No, exactly. We don't, because I wouldn't take it as a scalp. It is still by definition in an uptrend, yes, but as we would teach, there's no support here. I would look at this and say, there's no support here. While we may get a little bit of a move up, I'll short the retracement into resistance before I would buy this reversal. Right? Because the odds are, this reversing at an area where, in my opinion, there's no support, has a greater odds for failure. So, traders could take this long, but I'll be jumping in short here. I'll be getting short when I see this. So this is not the kind of buy setup we want to be looking to take. At number 7, topping tails go away. At 4, is it still in an uptrend? It is still in an uptrend by definition, but what is greater? The resistance overhead or the support down here? What's more significant? The resistance overhead is way more significant than support all the way down here. How about PBS after 1? Yeah, the lower highs and lower lows, yeah. The top and tail. Well, if this put in a retest pattern and a potent reversal up, yeah, then we could have been buyers. So if we had a potent reversal up, I could have agreed with buying above the potent reversal. All right, moving right along. Here we have prices moving higher. Here's a little correction bar. And we get a breakout, little correction bar right here. Then we get another strong move up, a fluid move which leaves little support below. We then start to go sideways. Once we break down, this we know is confirmed as an area of resistance. And once we break down and close below that area. Now, we could have shorted the breakdown with a stop right here over this doji bar, or we could have dropped down to the smaller time frame, which we have in this window right up here. So, as I said earlier today, wide range bars in a smaller time frame are a series of bars moving lower. You can see that right here. So, now let's say whatever, this is a 5 minute. And we'll say this is a 5 minute. And we'll say that this is a 2 minute. So you can see several bars moving lower to establish or create that wide range breakdown bar. So looking at this, right, this move lower creates a price void in this particular time frame, which could result in a retracement back up. And that is the risk of selling short after a breakdown bar. It's better to consider a retracement or continuation. So if you did not short this breakdown, don't just go and short under this breakdown bar. wait for a retracement, wait for a continuation pattern first. Yep. Especially with the void to move lower. Now, if prices retrace into the bearish wide range bar down, track the lows. Use 1 to 3 bars to short. And so if you get a little retracement, just start looking. The first break of a prior bar's low is where you want to be shorting. But if the bar closes at or above the high of the breakdown wide range bar, all bets are off. That's becoming a breakdown failure. Okay? Everybody following along so far here? I'm assuming yes, because there's no questions. But I don't like to assume. Sort of. What do you mean? All right, well, which one? Tell me. Major support being broken and changing the trend. Let me see. So I think this one here. Was it on this slide? Yeah. So you're hung up on why short over here. Okay, so major support being broken. Oh, I see what you're saying. I gotcha. Right. We don't break major support until we accelerate through here. So, we have to also consider what's going on. Lower high, lower low, lower high, lower low. When we get that combination within an uptrend, it tells us that the trend is no longer up, right? If you get that combination of bars, we're now in a downtrend, right? Because a downtrend is defined as a series of lower highs and lower lows. So once you get 2 or more lower highs and lower lows, you can now consider yourself in a downtrend. I should have been more clear on that. All right, so you've got lower high 1 and lower high 2, right here, right there, and there, and here is lower low and lower low. On a breakout from a base, where do you like to put the stop? Under the entry bar or the base? Well, just go back here. If I was to short this breakdown, the stop really initially has to go right here. I'm not going to give it to the top of the range. So if I'm going to short a breakdown, it's got to just start to go. So I'm going to use this little minor consolidation within that larger base as my stop. I don't like to give breakouts or breakdowns the entire base, because if they're going to work, they're going to close on their low, maybe they pause and then continue to move lower, but they're not going to retrace all the way back up above the breakdown bar. So I think it's fine to use the breakdown or breakout bars high or low as your stop. I thought you need a low. Well, you had a low right here. Right here was your first low. Tried to move up. We put in a lower high. Then we got a lower low. Another lower high. And then we broke this prior low to continue making a new lower low. So we had this initial pivot first. But you only need, what, one? Oh, okay. You need a low, then lower high, then lower low. Well, yeah, the second lower low is really the confirmation. That should happen. But once you have a lower high, lower low, and then lower high, the lower low should just follow. I mean, it should happen. But that's the ultimate confirmation. Is the second move after a retracement generally greater than the initial breakdown? So if I'm understanding this correctly, you're asking, is the retracement after the breakdown generally a larger move? No. The second move after a retracement. So you're saying breakdown, right? Sideways. So retracement, break, or sideways, then breakdown, retracement. You're asking, is this next move larger than the initial breakdown? Like that? Yeah, okay, yeah. Yeah, we were on the same page there. Yes, I would say so. Yeah. Because the breakdown gets the initial move going. It's the second push that's generally the good majority that then comes in to drive prices lower. So yes, I would say that is a fair statement. Just hope that you're looking at the time frame that gives you the breakdown or the retracement. Sometimes it won't happen on the time frame you're looking at, but that's part of trading. So is it better to wait? I like to wait, personally. I've seen a lot of breakdowns and a lot of breakouts fail. I personally like to wait. So The morning session here ended with strength, and we had a strong move up. The doldrums were able to hold on to the gains from that strong morning, and this bullish pattern, right, the strength of this and the ability to hold and no follow through to bearish bars and topping tails tells us that continuation of the strength later in the day is good. You can see we got a double bottom right here, which then kicked off this next move. And if you didn't get on the double bottom, there's your money bar right there, and another continuation before things got climactic. And so we had a double bottom within the context of an uptrend, which is a very good signal to take long. Now, in an uptrend, it's not required that we have a potent reversal. Now, if it happens that way, it's great. But in an uptrend, you don't have to require a potent reversal happening. But if you're in a downtrend, you absolutely do want to see potent reversals on both the left and the right of the W bottom formation. Generally speaking, 12 o'clock is not a good time to buy a new high or short a new low, especially after things have already moved throughout the morning. So, just looking here to the left, this PSS was definitely one that we'd be wanting to short, and it was then followed by a strong retracement which took out major resistance. The attempt to move lower, the bearish reversal, failed and was followed immediately by a 180, and we got another strong push higher. So, as I look at this move up, unless I saw something on a smaller time frame to have me thinking bullish, based on this time frame, I would not have done anything. I would not have taken a long to participate in this move up. Now, you did have a failed PSS right here, but that alone, it may or may not have been something to consider. I would have needed to see, again, the smaller time frame, what the internals looked like, what a larger time frame looked like. There would have needed to have been some more information for me to determine if that was going to be something I would do. Here, the morning session ends with weakness. The doldrums, it was unable to retrace, telling us that sellers remained aggressive, and continuation lower later in the day was likely. This topping tail here, this attempt to break out and 100% retracement back down, followed by the topping tail, very strong indication that prices are now ready to move lower. This is a good short pattern. Then we get this climactic accelerated move lower, bottoming tail, this breakdown to a new low, closed as a bottoming tail on its high. Odds are it's going to retrace until sellers get more aggressive, right? Which did not happen until over here, where we got this breakout failure. This breakout failure becomes our next shorting opportunity. So we'd be looking to short it under this area right here. That's where we'd be looking to short it. And then we just go into management mode. Alright, so 12 o'clock, as I said, not a good time to short new lows, especially after the morning has already trended. But why wouldn't we want to short this anyway? Why would we not want to short this new low anyway? ZYM has a greater tendency for failed breakouts and breakdowns. Now, the S&P doesn't have as many, YM, though, will have a greater number of those failed patterns. Now, why wouldn't we want to short this? Because it's already moved down several bars. It's a greater than 100% retracement, which tells us the odds are things are going to retrace a bit. So that's why we wouldn't be looking to short this. Take a few minutes here, review these start points, and we will go through them in just a couple minutes. All right. So, what do we have here at this star? This first one. Well, it's not yet a breakdown. Bearish changing of the guard, closing on its low. It will be, that's right. Yeah, the S&P does respect support and resistance better than YM. The NQs respect support and resistance area as well, also. Right here, at the second star, we have a breakdown. The third star here, the third star here, yes, a breakdown failure, new low reversal. Then, bullish changing of the guard, closing on its high. Yep, double bottom. Star number 5. Potent 180 reversal, no follow through to a bearish bar, with void to move up. I could go with failed PSS as well. You know, it's not one that we would be shorting because it came from a double bottom and new low reversal, but I could accept a failed PSS. But just recognize it's not one that we would ever be looking to short. In fact, it's one that we would expect or look for to fail. Star number 6, bottoming tails at prior resistance. Question. Okay. So we've got bottoming tails here at prior resistance, buyer stepping up. The resistance is right here. Right? Star, what is this, number 8? 1, 2, 3, 4, 5, 6, 7. Star number 7. We have a 180 reversal after a topping tail. Star number 8. Minor little breakout failure here. breakout failure because it ended with a topping tail. Nine, PBS, right? PBS with a potent 180 reversal at prior support. We got here now 10. Star number 10 is a shock type of a bar, a breakdown failure. You can put shock bar here. Took out the prior bar's low, turned back up, closed right up near its high. Take this bar's message, put it in the context of the uptrend. This is a good long scenario. We would take it over the top of this bar, and me personally, I would give this about maybe a 60% retracement back down, because if it even comes close to that, something's not right. When these patterns work, they just start to go. They don't retrace. 7. I'm going to count again here. 1, 2, 3, 4, 5, 6, 7. A bullish reversal and no follow through to topping tail. Also closing near its high. So one of the things that we talked about earlier was that in a sideways range, when the tails go away, that is when things are getting close to a point where we're likely to break out or break down. Okay. So you can put here 180, closing near its high, tails go away. Decisive close here. Buyers stepped up into the end of that bar. Well, yeah, this is a breakout failure, this last one up here. The difference between a breakout failure and a breakout bar failure, the breakout bar failure, what happens is you get the breakout bar, right, which is then followed by an inside bar, and then you break the inside bars low and come all the way back down to the bottom of the breakout bar itself. It could also be a new high failure, yeah, on a higher time frame. All right, so the breakout bar failure, it just has one more bar with it. Right. This here, Chris, is a shock bar. Right. That's a shock bar. The breakout bar failure here, like I said, okay, we're going sideways right here, then we break out. 11 is a breakout failure. This last one up here is a breakout failure, or a potent topping tail. So the breakout bar failure, sideways, breakout, inside bar, we break the low of the inside bar and retrace down to the bottom of the initial breakout bar. Whereas a breakout failure is just simply sideways, breakout, reversal back down. That's the difference. Yeah, you know, I'm looking at this again here, and I was reading the question before really looking at it, and this is more a new high failure and range expansion topping tail, then it is a breakout failure. So change that to range expansion topping tail after a new high. That's what your last star is going to be. And so does everybody have each of the star points labeled now? All right. The third star was a new low reversal and double bottom. You could see, yeah, I mean, breakdown failure and new low reversal. It's it's that idea. Traders got caught. There was a failure down there. Okay, multiple time frames. We're going to push along here. We'll go through multiple time frames and then call it a day. All right, so multiple time frames. We look at multiple time frames to get a bigger picture, a bigger idea of interactions between multiple groups of traders. So when all time frames are in alignment, trading odds are going to increase. Unfortunately, this rarely occurs. So in trend analysis, we've learned that we have to stay objective with the method to determine what the direction of the trend is. But when we look at different time frames, we can see different trends on each of them. So what do we do? What do we do in those situations? If we wait for all of them to be aligned, we could be waiting a very long time and it can lead to indecision. So we have to decide what time frame we're going to trade from and which we're going to gain a longer term bias from. And then we just apply everything we've learned up until this point. Trend analysis, support and resistance, bar by bar, and we can bring volume into that. And that's what we're going to use to find trading opportunities. So for me, the 5-minute time frame is what I'm going to use as my primary time frame. I'm not going to trade against it unless things are climactic. Another way of saying this is I'm only going to think in the 5-minute time frame. If the 5-minute time frame gives me a pattern, I am going to take it. I'll use, for entry points, we can use a 100 tick, a 1, 2, or a 5-minute. But again, my primary time frame is going to be the 5. Our longer term bias is going to be obtained from the 15 and 60-minute charts. That's for intraday. Now, we can look at the weekly and the daily for longer term, over the next couple of days and weeks, what we expect price to do. But for just intraday trading, the 15 and the 60 are going to be used for longer term biases and where we see voids or where we see the likelihood for prices to just chop around. So looking at patterns within a pattern allows us to refine entry points in a shorter time frame. So for example, if we see the 5-minute pulling back, it's in an uptrend, pulling back to support, we can use that 100 tick, 1 minute, 2 minute, to refine our entry points, looking for bearish bars having no follow-through, breakdowns that fail, potent 180 reversals, anything to tell us that buyers are beginning to step up. Right? We can use those signals on the smaller time frame to enter into patterns based on a bias from the larger picture. Right? As I said, different time frames will give us different pictures, and at times a different time frame is what we want to be looking at for the picture that makes sense to us. And so that's why we look at multiple time frames, because not every time frame is always going to set up exactly the way exactly the way we want it. So we look at multiple time frames. So, as I was saying, here we have a 2 and a 5. The 2 minute, right, what this is showing you down here is that this 2 minute green bar is the transition from this down bar to this up bar. On the 2 minute time frame, we had to have some type of slowing in momentum take place and then a rally back up, right, in order to get this 5 minute bullish reversal. So in other words, this 2 minute, right, this 2 minute bar reversal here, if we bought it above this reversal and then it did this, right, if we entered on the 2 minute and it moved up like this, that would have completed this 5 minute wide range bar up. Right? But we, looking at the 2 minute, would have been in over here. Someone trading off the 5 minute, they would have had to have been buying it at the top of this bar. So there's always going to be a transition on a smaller time frame, and that's what we look for. So, as I said, I used the example, a 5 minute PBS we see setting up. We drop down to the 2 minute looking for bullish bars. Well, this would be that. We would buy it over this green bar because it's into support, and we're anticipating that the 5 minutes going to complete a PBS as well. So we buy it on the 2 minute above this green bar, and our expectation is that prices will begin to move higher. Right? So, using that as a little foundation, just typing in my email here, hold on. There you go. Using that as the foundation, here's the 15-minute chart. Right? This red box on the 15, we're gonna drill down and look at the 5 minute. Right? So within this 15-minute chart, we're going to look at the 5. Right? On the 15 minute, we have wide range bar up, bearish bar down, potent reversal back up, and then a strong move higher. Right? So how can we have refined our entry based on the 5 minute? Well, here it is. Right? This red box here is exactly that same series of bars from the 15. So here's the move up, which is the wide range bar on the 15. This pullback is the bearish bar down, right? And here it is, a 5 minute PBS. So we could have entered over this little narrow body bar. We could have entered this over that bar based on a pullback in PBS into support, and then we go into our management rules. This move up here is what created the 15-minute potent reversal, and then we just continue to manage this pattern until it stops us out. Now, here we have another series of reversals. we can drop down to the 2-minute and refine our entry here again. On the 2-minute, here's the pullback, here's the bearish reversal, right into support, bottoming tail. We can buy it over that bar's high based on the 2-minute PBS, and then we just wait to see what develops from there. And it turned into a 5-minute potent reversal, and once we broke that 5-minute potent reversal's high, we knew that this was ready to move higher. Yeah, that you can also use the longer time frames to keep you out of what may potentially become a less than quality environment. Absolutely. So here's the 60-minute. And on the next couple of slides, we're going to be working off of, each of these slides that we're talking about right now is going to build on the next. So here's the 60-minute. We're going to monitor the 60-minute for trend, support, and resistance, and this is going to be for a longer-term intraday bias. We can trade against this time frame when it's extended and the 5-minute changes trend. So in other words, if the 60-minute trend is up, it's okay, right, for us to trade against that 60-minute only when it's become climactic and the 5 minutes in a downtrend. That's the only way we can trade against the 60. Of course, the best odds are going to be when these two are both in alignment. So here are support areas marked off. Those are going to be our support areas. So, okay, now with the bias that we just developed, here we have 60-minute and 5-minute. Each of these arrows, right, these green arrows represent agreement between time frames. The 60 minutes in an uptrend, the 5 minutes in an uptrend. Each of these green arrows here on the 60-minute are the same periods in time on the 5-minute. So here we have a money bar. Right, this 5-minute trend is up. We got a money bar. It broke the low, turned back up, closed on its high. Right, the 60-minute trend is up. It says that it's fine. It's okay to take long trades. The 5-minute trend is up, so we're looking for entries into this particular 5-minute chart. Here's our money bar. That's one. Pull back here, PBS, bullish reversal at support. Here's the next entry. Move higher. Little minor pullback. Potent bullish reversal. This topping tail, yeah, that's something to take note of, but the overall trend is up and buyers are in control. So this should have lower odds of impact on the chart. This should not have a significant effect on the chart if this is going to continue. So here was another opportunity to take a long trade. So this is how we use a longer term bias and associate that with the shorter time frames. As long as that 60 minutes in an uptrend and the 5 minutes in an uptrend, we're buying the pullbacks. Well, the stops would be, the initial stop on the money bar would be under the bottoming tail bar's low. Right, then you got another stop right there initially, and right here. So your stop is under the pivot. That's where you'd have your initial stop. Well, the pivots are going to form after the fact. Now, we don't know it's a pivot until it becomes one, until these bars start to move higher. So once we get this bullish bar here, once we get this bullish reversal and it trades over the high of that bar, we enter the trade, right? And our stop just goes below that low. Now, if the trade works out as it should, it will become a pivot low. But initially, the stop goes under those lows right there. If that was your management style, bar by bar, using the prior low, yeah, you would get stopped out on the break of that topping tail right there. And then you just have to re-enter. I like to use for the 5 minute, I like to use the prior bar's low if I'm long. I find that will get you the bulk of the move. That's me. Alright, so here we have now the 60 minute and the 5 minute again. Green bars represent agreement, red bars disagreement. But based on our rules that we laid out earlier, it's okay to take this long, and I'll explain why. So the first example here is this green star is at the top of this bearish bar down. Here it is on the 5 minute, the same area. It's a PSS into the area of major resistance with a bearish changing of the guard. So this is a PSS, that's in alignment with the 60-minute time frame and perfect setup to take short. And then we just manage bar by bar, wide range bar down, followed by a little inside bar, breaks the high of the inside bar, we're out with money in our pocket. Right? Over here, while the 60-minute chart is in a downtrend, it did become a bit climactic to the downside, and we had a bullish potent reversal here. Right? So while the 60 minutes down, it's climactic, and if the 5 minute is in an uptrend, it's okay to take longs. So here we have a gap up on this particular day and a bullish consolidation at major resistance. So this consolidation absorbing supply and the failure to move lower tells us that demand is strong on this particular day. We got a bullish reversal here, no follow through to two topping tails, and then a little inside bar. So here's our long entry, buying it on this breakout here. And because while we did not yet officially take out major resistance, based on the gap up, failure to move lower, no follow through to these topping tails and consolidation here, this says if you're not going to buy the breakout, you're just going to watch this go by. Right? All the information here said we were going to move higher, so you buy the breakout. The 60-minute was a bit climactic and had a potent reversal, so it was confirming that we're more likely to see prices retrace than we are further downside. Right, you guys see this? We're all on the same page here. All right, if we're all good, I'm going to go to the next slide. All right, good. All right, looking at two different time frames again. Here we have a PSS. This on the smaller time frame was that bear flag pattern that we were talking about earlier. The higher low, higher high pattern. So here's the higher low, higher high right into this area of minor resistance. On the higher time frame, it's a very picture perfect PSS. Neither of these time frames violated major resistance in either time frame. This should say PSS. This correction does not violate major resistance in either time frame and is a PSS in the higher. Right? So this is a 2-minute, guys. If you want to, it really doesn't matter what time frame it is because it's the concept that I'm trying to show you. But if you really need to know, this is a 2-minute, this is a 5-minute. You get a 2-minute bear flag, higher high, higher low, right into resistance with a 5-minute PSS. Perfect scenario right here. Beautiful. And you get a little continuation lower. This continuation right here was this little correction going on here on the 2. Now here again we're looking, this is exactly the same chart as we looked at earlier in the trend section. Using the trend script with the MA price bars, which colors it red if below the moving average, green if above. We have to do the actual trend and retracement analysis, right, to determine when major support or major resistance has been violated. But again, it's all about reading these reference points and not so much about the color of the bars. Sometimes the color of the bars will bias us in one way or another. And if you find that's true for yourself, well, maybe this is something you want to consider looking at. Just using a tool like this, where if we're below the moving average, it's red, the bars are going to be red. If above, they're green. And then you just look for the pullbacks or retracements. Here we have 2 5-minute charts, one with that MA price bar script, where if we're below the moving average, it's only showing red bars. And here we have a regular 5-minute chart showing red and green bars. So with the 5-minute trending lower and into a void, a green bar is nothing more than a multi-bar move in a lower time frame. So we use that lower time frame to spot entry points. Bearish changing of the guards, topping tails, breakout failures, anything to confirm the direction of the 5-minute trend. I am not sure, Ski Bum, but I will look into it for you. Let me just write this down. So I don't forget. Okay. All right, so there is a MA trend script for TradeStation. Okay, so the green bar here, the green star rather, the green star on each point is the same, just looking at different time frames. The 2-minute here was a little breakout bar failure. Now you see this? Breakout, inside bar, break under the inside bar's low, and back down to the bottom of this range. So that right there is the breakout bar failure. Now, what were the odds that this breakout was going to fail based on the trend? Were the odds good that a breakout like that would fail? Yeah, absolutely. The trend is down. Breakouts should have less follow-through. If you could type in the name for that moving average trend script in TradeStation, I would appreciate it. I'm not sure what it's called, to be honest. Okay, when you get a minute, thank you. Right, then we have, again, the lower high, lower low. This is the same pattern we just looked at. But again, if you like not seeing the green and red bars, then this is the script for you. If you prefer to see the red and green bars, then, by all means, use this instead. Now, you say, it looks like the gold star took out the previous pivot low. The gold star took out the previous pivot. You mean the previous pivot high? Pivot low. You mean over here? Are you looking at the 5 minute or the 2 minute first? Let me know that. The 5 minute. So is that what you're asking? Whether or not it's that a pivot low? No, that's not a pivot low, because remember, by definition, we have to have two higher high, higher low bars to each side, which on the 5 minute we do not. All we have is two higher low bars to each side, or rather not two. I'm sorry, but one. But we don't even have that. It's one higher low bar. Higher high, higher low bar to each side, but we don't even have that. All we have is higher low bars. So this is just a consolidation here on the 5 minute. And on the 2 minute, this just becomes a level 1 pivot low. Oh, let me see something here. It would depend on what happened with this bar. It might be a 2. It would depend on this bar here. Alright, so we're looking now at a 5 minute and a 1 minute. Each star, the colored star, is the same spot on each chart. So the green star and the green star, the yellow outline with the yellow outline, the blue with the blue, the red with the red. So on the 5 minute, guys, just send me an email and I'll take care of that for you. Send me an email. Right, so the first start point here, the 5 minute, here is consolidating. And we've got a little consolidation going on here. On the 1 minute, that same consolidation is happening right here. So what do we see that's going on down here that tells us buyers are stepping up? Bearish bars having no follow through. Bearish bars closing on their low having no follow through. That's telling us that buyers are stepping up on the 1 minute. Pullbacks and failures to move lower in a lower time frame with the direction of the higher time frame is what we're looking to do when we try and refine entries. Guys, what I want you to do is check to see, it might be called PRSMA price bars. You may have it named that instead. Just check that. But like I said, send me an email, we'll take care of it. Okay. So that's the green bar. The yellow outline star, we have this continuation pattern that formed here. On the 1 minute, you can clearly see a nice picture of money. We've got a nice money bar here. It tried to break down, bar reversed back up, bottoming tail, closed right up near the high of the range. So that would be the refined entry right there. Then wide range bar up. But you can see the 5 minute just continued to move higher. If you were trading the 5 minute, it would have been difficult to really get a good entry. But then let's refine down to the 1 minute again. Bottoming tail here, money bar. Sellers once again tried to drive this lower and failed. Another strong move up. Now, up here, after several bars in a row moving higher on the 5, things are starting to slow in momentum. And we got a new high failure here. Broke out to a new high, came right back in, new high failure, 5 minute topping tail, telling us that supply is increasing. Can everyone follow how we're going to use the 5 minute for our bias, but when appropriate, use a smaller time frame to refine the entry? That's correct. There was no support here on this first green star, but on the 5 minute it was just consolidating. Right? So the 5 minute was saying that this is just holding, it's consolidating, and unlikely to pull back. So this little attempt to break lower and failure becomes something like a breakdown failure, especially when you throw into that these bearish bars that had no follow through. He tried to break lower, it couldn't do it, and then we got a strong reversal back up. There you go. There you go. Newton's Lab has it. You go to the paint bar. So here again, we're doing the same thing, but now in a downtrend. Green stars match up. We got a retracement here and a breakout failure on the 1 minute. This matches up with the PSS on the 5. We continue to move lower. Here we have the yellow outline star, an attempt on the 1 minute to move higher, but a complete smackdown. Can you take a trade of a 2 minute and use a 5 minute low as your stop? Well, yeah, you can do that. You can take an entry on the 2 minute and use the 5 minute as your stop. I mean, it's going to be pretty much, assuming you're buying a PBS, it's going to be the same place, or even a breakout, it's going to initially be the same place. You know, so I mean, look, if you took this PSS short on the 5 minute, or let's say you took it on the 1 minute, and you shorted up here on the 1 minute, but you want to use the 5 minute as your stop, it's the same thing. Your stop is still, either way, going to be up at that high. even when it's a continuation like this. Your stop is still going to be pretty much the same spot. And you can see here again how we're using each retracement on the 1 minute when there's void to move lower. We're using each retracement on the 1 minute as another entry point into this downtrend. Then we get a climactic move lower, range expansion bottoming tail on the 5, right? A breakdown, wide range bar followed by an inside bar on the 1 minute. Right? There is our signal on the 1 minute that momentum is slowing. So based on the 1 minute, we could have gotten out of this a lot sooner than on the 5 minute once things became climactic. How would I compare using the 1 minute versus the 100 tick? They're similar. They're similar. You know, different time frames give you different pictures, but you know, you could use the 1 minute or the 100 tick. But what I'll say to you is this: when you're going to use a 1 minute or a 100 tick, make sure that you have a clear, decisive trend in place before trying to use these small time frames. If you try and trade these small time frames without having a strong trend intact, you're going to get beat up, and it's going to play on your psychology. So don't use them unless it's a real strong trend. When do I plan to finish? We have 1, 2, 3, 4, 5, 6 slides left, so I'd say 6:30, 6:45 we should be done. If that works for you, of course. All right, so here we have a 5-minute chart. Right, trend is up. Buyers are in control. Here's a pullback, bottoming tail. This tells us that we now need to be thinking long. Right? It moves above the highs and comes back in, closes bearish with a topping tail. That provides a shock pattern. That is what gets this moving lower. So, you know, you look at this and you say, well, look at the support here. Look at the support here. I wouldn't expect that we would just see a fluid move through it like we got here, right? I mean, does that make sense? When you look at this support, wouldn't you be saying, you know, my expectation is that it would take a little bit of work to get through this area? Can we all agree on that? Yeah? All right, good. So why did it move through it so quickly? It's because of this shock. It's because traders got caught here. And when traders are caught, they don't care about support or resistance. They just know that they're feeling pain and they don't want to feel it any longer. So the fact that this was near support is irrelevant at this point. They didn't expect this to happen. Now they're sitting with a loss, and if they hold any longer, they're in trouble even more. So they're getting out, and then there are those traders that recognize this shock, taking advantage of it, and they're shorting. So you've got various groups of traders here driving this through that support with really little to no reaction. All right? So that's what gives this the fuel to move through that area. The next day, we're gapping up. We're gapping up into this prior pivot high. The second bar of the day is a wide range bar up which closed on its high after again gapping to the top of resistance. So this is a 5 minute. This bar tells us that buyers are strong. Right? This bar tells us that buyers are strong and that this is going to continue moving higher. So it's then followed by an inside bar. If the 5 minute was our time frame, we're buying it above this inside bar bottoming tail bar's high. We can, though, refine it on the 2 minute, which we're going to do on the next slide. But we have a nice move up here. Topping tail. This topping tail tells me that, okay, we're likely going to see a pullback. Right? There's nothing that says this is done going higher. It's just a normal correction after a move up. Pullback, bottoming tail at minor resist or minor support. Why, so we buy it above the bottoming tail bar's high here. We get a wide range bar up right when we enter. This is exactly what we want to see. And then we just go into management mode. So we can even refine, and we will refine on the next slide, what this looked like on the 2 minute. But this 5 minute wide range bar igniting a move is exactly what we want to see when we're entering a PBS. Then we manage it up. Wide range bar ending the move. Wide range bar, notice also the volume here, that increase in volume down there on that wide range bar. And it was also followed by an inside bar. Strong message that this is going to pull back and begin to retrace into the next area of support. Now, I remember this day. I called both of these trades in the E-mini room. I know I called this one off the 2 minute, and I believe I called this one off the 5 minute. I believe we took it off the 5 minute here. But I remember this day. I know that I called these two trades. So let's refine on the 2 minute. Let's see what it looked like on the 2 minute. Here it is. This is exactly the refined entry from that 5 minute. We got our little money bar right here. So we buy it over this bottoming tail. Right? After several attempts to move lower failed, wide range bar closing on its high, consolidation, bottoming tail, buy it over that high, and then just manage it. Now, notice there were topping tails along the way. It took a while, but did any of these topping tails have follow through? Did any of these topping tails break the first point of support? Which, by the way, is what? What is the first point of support? You guys tell me. Prior bar's low. Exactly. That's our first point of support. Never once, even with these topping tails, was the prior bar's low violated. Then we just continue to move higher. Right? Pull back into support. Bottoming tails. This bar closed on its high. Says we're going up. Strong trends do not always pull back to support. They create it, which is what happened right here. This did not pull back to any support. Instead, it went sideways and created the support. And then that's when we got this fluid move up, which is the 5 minute wide range bar that we were looking at on that prior slide. This series of bars moving higher is one large bar on the 5 minute. You're missing this page. What you can do is take a snapshot of it. These have been added. I just added these recently. The next what, 2 or 3 slides, I think it is. 2 or 3 slides. Or you could email me. I could always send it to you as well. This way you have them. Alright, so I'm going to switch over to the next slide now. Here we have the 2 and the 5 minutes side by side. It's just PowerPoint, Zed. Just PowerPoint. All right, so here's the 2 and the 5 side by side. Each of these arrows represents the same areas on either chart. The 5-minute breaks down under a sideways range. So here's the breakdown. Right, here's the breakdown. So we're looking to short the retracement into resistance after the breakdown. Zed, this kind of gets, I'm pretty sure it was you, Zed. What do you mean during trading hours? Well, I mean, on eSignal, I could draw arrows using eSignal software. I don't have PowerPoint open, though, during the trading hours. If you mean, will arrows be used? No, I could use straight lines as well during, in eSignal. Okay. So I think you were asking me earlier, Zed, about this. You asked about after the breakdown, is the retracement and then ensuing move usually bigger than the initial breakdown? And I said yes. Here's a perfect example of that. So here's the breakdown, retracement, potent reversal on the 5-minute. If the 5-minute your time frame, you're shorting it under that potent reversals bar. Okay? If you're on the 2-minute, you could have gotten in a little earlier and shorted it right here under that topping tail and bearish changing of the guard. Either one is an acceptable entry. Neither one is better than the other. You don't have multiple time frames at all? Or just these slides? Is it just these slides or the entire multiple time frame section? Nothing at all. Okay. You only have 3 pages in multiple time frames? That's interesting. All right, well, we'll get it figured out. We'll get it figured out, no worries. I'll take care of it, don't worry. All right, so, like I said, neither one of these is right or wrong. If you're a 2-minute trader, then that PSS is perfect. If you're a 5-minute trader and that potent reversal works better for you, then that's the pattern to short. There's no right or wrong. Whichever one is making more sense to you at that particular time is the setup you should be trading. Now, right before we got the real accelerated move, there was this little inside bar. That was the next opportunity, which was this little area of pause right here before the wide range bar down. Pullbacks and failures on the smaller time frames set up continuation of the trend. On the higher time frames, bias. So this little failure to move higher set up the continuation lower based on the 5-minute bias. Here's another example. Drilling down. And again, you don't have to drill down. If you want to use the 5-minute as your only time frame, that's fine. You don't have to drill down. But if you choose to, this is what you should be looking for. Is these slowing in momentum patterns, bullish or bearish reversals in the direction of that 5-minute trend, breakout, failures, whatever the case is. This is what you look for. I just find for me, John, continuations have lower odds of follow-through. The only times I'll take them, and the times they work the best, just like with any pattern, is when there's a price void. That's when they're going to work the best. So here we have a potent reversal. The trend at this point was up, right? But this potent reversal told us supply is increasing. Sellers are becoming much more aggressive. We then we break down under major support. Retracement here, 5-minute PSS at a prior resistance area. We're looking to short this. Right? Again, this 5-minute pattern is beautiful. There's nothing wrong with this 5-minute pattern. But if you were looking at the 2-minute as well, and you saw this double top, this is a perfectly acceptable pattern also. A beautiful pattern, in fact. Retracement to major resistance on the 2-minute, a double top, no follow through to the green bar. The bearish bar closes on its low. Beautiful pattern. Nothing better. You know, the 5-minute, it's not going to get better than this. Beautiful pattern, beautiful move down, void, and then we just manage it. Here we have the 5, the 2, and the 100 tick. This green star is the same spot on each of these time frames. So like I said, when do we want to use tick charts? When we have a strong trend established, where there's void to continue moving lower, where the odds are we're going to see nice fluid follow through. Right? So here's a 5-minute. Topping tail bar, closing in the lower part of this bar's range. Says this is going lower. Right? We assume that there's a large price void below. What does it look like on the 2-minute? Several bars going sideways here. A bearish bar closed near its low. Topping tail closed near its low. A little inside bar. If you're not shorting under this base here, you're going to miss it. If you're ignoring the message that's being communicated here, you are going to miss the move. Now, a tick chart's not a volume chart, it's an activity-based chart. It's an activity-based chart. So it's looking for 100 ticks to go off, right? A tick being either an up tick or a down tick. It's looking for 100 ticks. It's not. It could be 50 contracts making that chart up or that bar up. It could be 100 contracts. It doesn't matter. So on the tick chart, right, this same little area would have been a very clean, easy to see PSS after a bearish retracement down. And so breakout failure, retracement here with the 2 and the 5-minute confirmation. Here's a beautiful entry on the 100 tick. No, you don't know the volume. I'm just saying, it could be 50 trades, it could be, or 50 contracts, it could be 100 contracts, or 200. You don't know the volume. Is there a reason you have the painted MA bars on the 5 and not the other ones? Just because we said earlier that the 5-minute was going to be what we use for our main bias, and all we really want to know is what's the direction of the trend based on that time frame, and not caring so much about what color the bars are. just more interested in the trend and then refining based on the smaller time frames. That's why. But again, if you don't like it, don't use it. I mean, it's just some people visually this appeals more to them, and they'll be more comfortable using this. If you don't like it, don't use it. If you find something that doesn't fit your eye, don't do it because someone else does. If you don't, good. I don't like it either. I don't like it either, but some people do. Nothing wrong with it. Nothing wrong with not liking a particular method of interpretation. What advantage does the tick chart give over a minute chart? What tick time frame do we use? Well, the 100 tick works well, but again, the time frame you use, it doesn't really matter. It's what time frame are you comfortable using? Some people are more comfortable using a 250 tick for whatever reason. If that's what's more comfortable for them, hey, well, all the more power to you. It's about where you find the most comfort. The 100 tick works well with YM. As far as what advantage does it give, well, you may get in a little sooner on a tick chart than you would on a minute chart. That's really, the only advantage. You may get in a little sooner. But like I said, don't use these unless you're dealing with a real strong trend. If you don't have a strong trend, these things are going to chop you up. For ES, what tick do you use? I personally don't use the 100 ticks, and I'm not that active in trading the S&P. I do think, though, that traders use either the 100 tick or the 250 tick for the S&P. Now, when choosing a moving average, as I said, we're going to use the 13-period moving average. So if we want to have the 13-period moving average on our 5-minute and also know where the 13-period moving average on the 15-minute is, we're going to want to use the 39 simple period moving average. We don't want to just choose a meaningless moving average. We don't want to just say, oh, the 20 and the 40 sounds good because that's what everyone uses. Or we don't want to use a 13 and a 20 because the 20 is what a lot of traders use. And we want to use something that's going to provide value to us. So knowing where the 13-period moving average on the 15-minute chart is will add value to that 5-minute chart. Because if we know that prices are trading above the 13 on the 5 and the 13 on the 15, then the odds of follow through to the upside are much, much greater. You look at this chart here, and this is just a mess. But look at how decisive things are becoming. Look at the consolidation that's happening up here. This bar closed on its high. Look at the 15-minute wide range bar up. Inside bar, price void to move higher, above the 13 MA. This is becoming much more decisive, and this is saying to me, we have to be getting ready to be a buyer on a breakout. Can you guys see that? Can you guys see how this is becoming much more controlled and much more decisive rather than this whippy junk? This stuff you just sit on your hands and avoid. But the tails are going away, the bars are becoming much more controlled, and the 15-minute looks great. You guys see that? Yeah, if you have overlapping bars, it's not a bad idea to look at the higher time frames. Not a bad idea at all. Absolutely. So again, when you choose a moving average, make it meaningful. Use one, for the 5 minute, use one that's approximately equal, right, to the length of the moving average you're using on the larger time frame, which again, by the way, should be the same. So again, the 13 period moving average on the 15 is approximately a 39 on the 5 minute, which allows us to see the trend in both time frames. Are we above both moving averages? If so, odds are we're likely going to see much more fluid price action. Right? Here, we were above the 13 on the 5, but below the 13 on the 15. You just get all this whippy junk. But now that we're above both, price is above both, things are becoming a lot more certain at this point in time. All right? And that takes us to the end of day 1. You all made it. What do the long tails mean? Indecision, uncertainty. Traders don't know which way the market's going to go. That's what that means. Nobody has a clear understanding of which way prices are going to move. So, we just don't do anything until we get more decisive price action. You're wondering about the underlying price action? Well, again, we just follow the bars and what their messages tell us. If we're seeing a bunch of topping tails and bottoming tails, there's no action to do. There's no action to take there. All right, Baez, have a great night. Thank you. What is there anything I need to know about tomorrow? Show up on time. Be ready with some questions. We'll start with the review first. And as far as anything specific about tomorrow, no, there's nothing specific about tomorrow that's going to happen.